Hi everyone, good afternoon to all of you. I'm answering questions that you guys sent over social media as part of Icon 2018. For those who don't know what Icon is, it's an investment conference that we do yearly with Randall Chongson. This time I sent a couple of Facebook questions for those who wanted to send in or chime in whatever questions that they would like to know about investing, and I said I'd answer them. So just for those who want to know more about our event Icon 2018, it will be this May 26, 2018 in Samsung Hall with Randall Chongson, Rex Mendoza, Dodong Kakanando, Marilyn Faustino, Denise Kakanando, Sean C, June Neri, Alvin Ang, and a lot more, with the whole goal of bringing financial freedom and creating such an awareness that investing and entrepreneurship is cool and it should be for everyone, that it's time that we bring more Filipinos closer to their goals and their dreams of financial freedom. So I'm gonna go through a lot of the questions that you've sent, so I hope that I get to answer them in the next few minutes. So let's try to do it as fast as we can. Randall Chongson was supposed to join me, but we were supposed to do it during ANC on the Money after our taping there, but we weren't able to compile all of the questions that are there. So this is me now trying to answer some of the questions or top questions that I've highlighted, and for those that I missed out, I'll try to make another video for that as well. Alright, the first question came from Zanet Uyreville. She's asking, peso cost averaging, do I really need to buy monthly even though the price is really high, or is it just possible to let it stay as my buying power and wait till the price will go down? So there's a lot of perspectives that you can use and look as compared to peso cost averaging. I made a video about that in the past, showing the pros and cons of peso cost averaging. You have to remember this: peso cost averaging is not the holy grail. No, it's not foolproof. It's not the best ideology out there. It also has its own pros and cons. You are right if you want to come in and you want to be more strategic in your investing. One way to do it is to use valuations, that if the stock is cheap, you have to understand this, it does not mean that the stock price is low, that the stock is cheap. Please remember that. It doesn't mean also that the stock price has dropped, that it cannot continue dropping. That's why if you want to forego peso cost averaging, the first methodology that I'd like to introduce is just do valuations. If the stock becomes cheap and valuations point out that it's cheap already, please remember, it doesn't mean that it has to drop for it to be cheap. When the valuations and the ratios dictate that the stock is cheap already, that's when you start to come in. But you have to understand, there has to be conviction in your part. When stocks drop, there's a lot of fear there, and it also there are times when stocks drop, it becomes cheap, it becomes lower. But you have to understand this: for it to start to reverse, it may take a long time for it also there. So it also entails patience on your end, that you come in when no one wants to come in, you come in when it's relatively quiet, but there needs to be a degree of patience in your end to come in that way. Second is, you can also use technical analysis. You can use the ideology of reversals in a stock. When a stock starts to reverse, that's when you start to come in. Me, I'm really under that conviction. I like to come in when stocks start to reverse. I really like to come in. I don't want to buy a stock while it's falling. I don't want to buy a stock while it's dropping. But I want to buy a stock when it has started to reverse up. So you have to remember this: I'm not here to look for the bottom, because no one can really consistently find where the bottom is. But I want to come in when a stock starts to reverse. So those are two methodologies on how you can forego peso cost averaging. Peso cost averaging is not for everyone, because you're right, it will cost you to buy stocks at a high point. And if you're doing peso cost averaging, it really doesn't work if your time horizon is just 1 year. It's for people who have a longer time horizon. All right, second question we have from Dennis Serafico. He's saying, hi Sir Marvin, please help me understand the basic thing that I need to know to determine a good company to buy a stock from, and to also know the best time to sell and take profits. So it's similar to the question of Zenet Reville kanina, but this one, he's asking more specific buy and sell criteria. You have to understand this also. There's so many variations on how you can buy and sell a stock. You can actually use moving averages. I love using moving averages because it allows me to find key reversals, key areas where the stock starts to reverse and starts to go down. I love that. You can also use support and resistance as you buy every time a stock bounces from a support, and then you take profits every time it hits the resistance. The difference though between using support and and resistance and using moving averages. Moving averages are already chart overlaid. You don't have to draw it yourself. So if you're not comfortable drawing it by yourself, it might be more prudent to use moving averages. But if you want to draw it by yourself naman and you're confident to do it, then that's the best time for you to use support and resistance as well. So that's one. You can also use oscillators. One of my favorite oscillators is MACD. I love using MACD. I love using ADX. I love using RSI. There's so much oscillators out there. So you have to pick. I suggest, so that entire ideology that I mentioned is under the prefix of technical analysis. It's you studying old prices of the stock. It's you studying past prices to determine buy and sell signals. So without that, personally, I don't do my trades. Without that, I don't sell without using charts. I do not buy and sell without technical analysis. I don't guess. People are asking, Marvin, should you sell a stock when it hits 10%? I don't sell a stock when it hits 10%. I sell a stock when my technical parameters tell me to sell, and that's the best way for you to be able to sell without using any emotions out there. So I hope I answered your question, Dennis Serafico. Next, there's a question from Ned Sin. Ned Sin is asking, how do you identify if a stock is breaking out? So you have to remember this. Technical analysis is a craft. It's a skill. It's something that you spend a lot of time also to hone. So why am I saying this? For you to identify the breakout, you need to identify also, and you need to practice plotting your own resistance levels. A breakout is basically a stock that has beaten or has crossed above a resistance level. So once you know how to plot a resistance level, and once you know how to spot that it has gone above that resistance level, that's when a breakout is occurring. As what I mentioned earlier, another proxy, another shortcut for a breakout is to use oscillators, or for you to use moving averages. When a stock crosses above a moving average, that becomes your buy signal. So an easier way for you, if you do not want to actually draw your own, if you do not want to, because what I've seen is the biggest challenges for a lot of people is this: when they try to draw their own support and resistances, they have a hard time plotting which resistance here is something that will ultimately be my breakout point. One clue for you is this: try to find an area within that range that it touches regularly. The more touches it hasn't really broken out from, that will become your resistance. And once you see the stock move above that, then that's what you consider the breakout. Please remember this: even if you use moving averages, it's not foolproof. It takes practice. This is just like riding a bike, or cooking, or trying any other skill. Let experience be your guide in doing this. Learn the principles, develop a strategy from it, but let your experience be your ultimate umpire to help you determine whether it's a good buy or not. So there. And please remember this: do not rush to get rich. Investing in the stock market is not the lottery. It's not get rich quick. It's something that if you do it right, do it regularly, do it with the right strategy, it will help you reach your goals of financial freedom, and it will help you make money for you. It will help you also, I don't know, even if you're at the beach, at the mountains, wherever you are, you can trade the market. So you just need to find a way to develop a skill or a strategy that will fit your own lifestyle and your own time frame. Alright, so I've answered 3 questions pa lang, but let's try to go through this again. Next one from Jojo Chance. He has a cartoon character, so I'm not sure if this is a real profile, but he was also asking how to identify what stock to buy that has a potential to break out on the spot. Here's the thing: we don't actually know which has a chance to break out or not. We will only know once it starts breaking out. So that's the thing about technicals. We don't forecast, we don't guess, we don't speculate. We only make our trades based on what the chart is telling us. So what's the application of that also? It may cost you at times to buy a stock relatively higher, but that's the game in technical analysis. The higher it becomes, the more confirmation you will also get. And that's also nice. It's not wrong buying a stock that's higher as long as it has broken out. Why? Because it has more confirmation. The more confirmed the buy signal is, the greater conviction you will have that what you're buying is something that's solid and is something that's legit as well. So to answer your question, we will only know a breakout once it has started to break out already. Alright, next from Victor Vallarata. Hi Marvin, what will happen usually if the X date is getting nearer by the day? Is it the buyers who will overtake the sellers or the other way around? Let's say APX date in March 19, 2018. Okay, in my experience, no, every time a stock hits an X date, or as the stock hits its X date, it normally drops in proportion to the percentage of the dividend that it gives. So for example, it's a 5% dividend, you can expect the stock to go down 5% in proportion to what the dividend that it's giving. So the basic concept about that is why does it have to go down in proportion to the dividend? Because here's the thing, after the X date, those who buy the stock won't get the dividend anymore. So what does that mean? Those who buy the stock after the X date have to be rewarded. Why? Those who hold the stock before the X date will get a dividend, but those who buy it at the X date or after the X date won't have a dividend anymore. So if it's a 5% dividend, that person won't have a dividend anymore. So that's why he will say, I won't get a dividend, I have to get it lower. That I have to get it lower by 5% because you'll be rewarded by a dividend. So you should sell it to me 5% lower. So something like that. But to just make it simpler, every time there's an X date, the stock goes down at the time of the X date, because ultimately the one who will buy it from them won't have a chance to get the dividend anymore. Okay, now next. Okay, how much shares is considered low volume or high volume? I don't really look at it from if you're comparing other stocks though. It's not about the volume of shares traded. Why? Because there's a lot of stocks that have smaller amounts, meaning a stock that's 1 peso or less than 1 peso will have more volume traded into it as compared to a stock that's 100, 500 or 1,000 pesos. If you want to compare stocks that are of different companies, use value turnover. Value turnover is the exact peso amount. So if you're asking for liquidity, for me, I really like stocks that are around 40 or 50 million peso value turnover. It shows me that there's a lot. It's not relatively high, it's not in the 100, 200, 300 million peso level, but having 50 million shows me there's a consistency, that there's a good set of liquidity for the stock. So 40, 50 million value turnover is relatively respectable, especially if stocks will start to break out. You have to remember, stocks that break out need volume, that need a lot of peso movement in it, and it needs a lot of conviction. And 40, 50 million is not as high as what other blue chip stocks are getting, but 40, 50 million is quite a respectable amount already. Next, when should you cut loss? How many percent from the purchase price? For me, I do similar to my selling signal. When stocks go up, I do not sell just because a stock goes up in percentage. Even for my cut loss, I do not sell the stock just because it hits a certain percentage. I always sell once there's a breakdown, once the support does not hold. That is my sell price, that is my sell signal, that is an opportunity for me to get away from the stock. Because when a stock breaks down, sellers overtake and more sellers bring the prices down. So for me, it's not a matter of percentage, but it's a matter of who is winning the market. If sellers are winning in the market, I don't want to be part of the stock. I will sell, I will cut my losses. So it's just up to you how far from the breakout point, a breakdown point, you would want to stay. The longer you stay when a stock starts to break down, that becomes relatively risky because you don't know how low it will go after that. So that's it. Do I try to get one more question? That question, by the way, was from Bobby De Garcia, and also the question about volume was asked by Jen CQ. So I'll make another batch of this. This video is already almost 15 minutes. I'll make another video. I'll post it again later on. I guess probably in the next few days. But Icon 2018 Samsung Hall. It's not just me speaking, but there's a lot of prolific speakers who will share not just their heart, not just their intellect, but how you can actually make money in our ever-growing economy. Because here's the thing, this is our shot as Filipinos. This is our shot as Filipinos to make something while our economy is booming, while our economy is doing better. I really believe this is our shot. This is our one set shot to make money off our markets. If we don't do it, foreigners will do. And I really believe it's time for more and more and more and more Filipinos to take advantage of what we have. I really believe, I really hope that it's not just the same people who becomes rich, but I really hope that we spread it out, that the middle class will become bigger, because I really believe that we deserve better as a country. I really believe that we can do something to make our country great again. So this is Marvin Germo from Boracay. See you all again soon. Icon 2018.